That's 7 years. Do it 14 year. Do it, you know what I mean? 10, 20, 30 year out the road.
Mhm.
The guy that has cash flow, we will outrun their ass, bro. We'll leave him in the dust like a Ferrari and a Pinto. Everybody always mock me like, yo, passive income, yeah, man, it's so fucking slow, blah, 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 blah. And I'm like, yeah, but we're not comparing passive income to active income. Active income, I make a lot of money in active income. You know what I mean? Right? But I don't talk about active income. I mean, you know, I make like over $10 million a year in active income. I never talk about it, right? I always talk about passive income, right? But if I had to compare myself, yeah, I make over $10 million a year in active income, and I got $100,000 a month in passive income before all my other property get paid off. So the game of the game is I still create active income, and I just use that money to pay down my property. Today, I got plenty of property. I just need to pay them off, all of them. If I get all of them paid off, I'm going to get probably 250, 300 grand a month in passive income.
Is that your goal?
Yeah.
That is your
I'm
goal.
54 years old.
Yeah.
You know what I mean? I mean, how much do we really need, right? I mean, my house is paid off. You know what I mean? My whole personal expense is only like 30 grand a month. You know what I mean? And I got, you know, if I pay all my property, I'm going to get like 300 grand a month. And if I hold my property, don't do nothing to it, don't do nothing, don't even trade it, in the next 15 years, I'll have $1 billion in net worth.
Say that one more time.
Yes, sir. Let me say it again in English. Right? And I have no investors, just so you know. If I hold all my property and I don't 1031 them to anything, just leave them alone. I'm not even talking about passive income. I'm talking about just compound appreciation.
Sure.
15 years from now, maybe 20, all those property be worth over $1 billion. I have over $1 billion with the net worth.
And that's no 1031 exchanges or anything.
Leave
just
it alone,
paying
as
these
is.
things off and let them roll.
Just that, even if I don't pay them off, this compound appreciation will get me to $1 billion. And I started by buying one property in 1997 at 1530 South Shelton Street with 5% down. So you know the American dream work.
It does. It
but
does.
You know what? But you know what the difference is, Rich? Nobody have the patience for delayed gratification. I got to do both, bro. I still make active income. I keep telling people on social media, keep doing active income. Just take some of that money and just park it. You don't. It ain't like you do this to live off the passive income tomorrow. You're gonna live off the active income. Do this so you can actually have something for tomorrow.
Yeah. I think there's 2 reasons why people don't get into real estate investing. I think one, they're around the wrong circle.
100%.
I hear a lot of people that come up to me or they come up to me at meetups and they're like, hey, I want to do a deal. And I'm like, hey, go read this book and like listen to this podcast. And then I see them 9 months later. I'm like, hey, what's going on? And they'll be like, oh, like I got sidetracked or life got busy or I went and talked to my father-in-law and he told me it was not a good time to buy.
Yep.
And they get talked out of it by people that don't own any real estate. And then I think the other reason is people just don't want the delayed gratification. They want the get rich quick scheme. And so, real estate investing, you're playing the long game. 3 years down the road, 5 years down the road, 10 years down the road, you're going to see some results. But a lot of people don't want to wait 12 months. They don't even want to wait 6 months. They want something that's going to happen right now.
And the thing is that if they keep their active income going, they wouldn't even think about the passive income. That's just like nobody sit there and go, man, I can't wait till my stock market cash me out, bro, so I can stop working. Nobody think like that, right? So I say to people, you don't park the money into rental and expect that thing to give you 20 grand a month in passive income tomorrow. You just keep doing what you're doing. Take some of that money that you're already spending on the Gucci bags and the Louis Vuitton shoe and all the Rolexes, all that stuff. Park it in some rentals. And then 10 years, you look back and go, damn, how do I have 10 property? Right? And it's pumping out now 20 grand a month. And you're still making millions over here, whatever you're doing for a living.
I agree, man. And if you buy the assets first, those assets can go buy the Louis Vuitton bags and all the nice stuff and the nice cars. Yeah. Right? What are your thoughts on this? So like, some people say, hey, I love investing in the Midwest because I get the cash flow. It's too expensive to buy out here in areas like Seattle, like San Diego. So I go and invest in the Midwest. What are your thoughts on that?
Well, I could tell you from interviewing a lot of people myself who owns property in those areas. Okay, and this is what if I interview 20 people, and this is what they all say. That's when I started, I was broke. I didn't have any money, and so what I decided to do, I was going to raise capital, and the way I can actually really scale this thing is to buy apartment buildings. And so the only way we could actually get a lot of doors cheap is we got to go into those areas. And so we end up getting 1,000 door, 2,000 door, 3,000 door. And after owning them for about 5 years, 6 years, 7 years, 8 years, 10 years, we realized, man, the market really hasn't appreciated as great as I thought it was in these areas. And as much work that it takes for my property manager and for the cash flow we make, and we got to put it back in the building, we're not getting ahead as much as we thought we was. And so what we decided to do is we're going to actually take a bunch of our property, like half of our portfolio, and trade them for more of a B market area so we can get some compound appreciation and better tenant. We might lose doors, but the number of doors we lose for the appreciation and the cash flow is actually good. And I can tell you, I was on a Bigger Pocket podcast. There was a whole bunch of people that was on there that was multifamily, and that's what they did. Me and Ken McElroy, we was hanging out in Arizona. He's owned all his doors in Oklahoma City, all of them. When I saw him last year, he sold off his last big apartment building in Oklahoma, and all of them is in Arizona now. And he said the same thing. And so for me, is those areas are great if you have no money starting out. If you want to get some cash flow, I agree. Those cash flow better than San Diego, Seattle. But at some point, I say to all my students, if you're going to invest in this area, don't put all your egg in that one bucket. If you want some cash flow, let's say you want 10,000, keep 5 or 6 of them that's producing 10,000, then invest the rest in the area where you have appreciation.
Yeah, I agree.
So 20 years, 30 years from now, your net worth will grow. Like, for example, in Seattle, average home, let's call it 700 grand. Okay. If you put down 20%, you put 140, but it's worth, you got a $700,000 investment. It doubles every 7 years in Seattle, just like in San Diego, probably, right? That means $1,700,000 will go to 1.4 million in 7 years. Another 7 year go from 1.4 to 2.8.
Hey guys, if you're looking to get into real estate investing, but you're like, hey, I don't have the time, but you want to participate in the passive income, the tax benefits, and the wealth building, my company, Summers Capital, partners with limited partners, people like yourself, and we go out and buy boutique hotels. We have a fund where we currently own 5 hotels, and we currently have a wait list for investors to participate with us. If you want to learn more to see if this is a fit for you, you can go to summerscapital.com/invest to inquire and get on our wait list and be notified next time we have an opportunity. Again, summerscapital.com/invest. Now back to the show. You go buy that same $700,000 property in Oklahoma City, you might get, if you're lucky, you might get $1,200 in cash flow a month.
Yes.
Let's just call it $10,000 over an entire year. Okay. So in the same 7 years, that $10,000 a month cash flow is going to multiply by 7 years and get $70,000 in cash flow.
Thank you, bro.
$70,000 or $700,000 in appreciation.
Bro.
And that's the main
point
difference.
I'm making, dog.
That's the main difference.
That's the more I'm making.
Yeah.
Not too many people get that shit, bro.
No. Yeah.
I be telling people that shit. You know what I mean? Now, imagine that's 7 years. Do it 14 year. Do it, you know what I mean? 10, 20, 30 year out the road.
Mm-hmm.
The guy that has cash flow, we will outrun their ass, bro. We'll leave him in the dust like a Ferrari and a Pinto.
Yeah.
20 years from now.
Man. And that's been my progression. So when I first got into real estate, my first deal was 11 unit apartment building in Cincinnati because it was cheap. I bought it for $350,000 and it got me in the game.
Yes, it did.
And I'm actually selling that property right now. It did good. Like I bought it for $350,000, but it did good because I forced appreciation. I renovated units, I got the rents up, and now we're selling it for just over $800,000. Okay. But the reason I'm moving it is because I'm going to move that equity into San Diego. It's an area here that I believe in. I'm bullish on this area. It's a high growth market. And I'm a 1031 those proceeds into something out here that's 1.65. I'm under contract right now. And I know this property out here, my team can manage. But also in 10 or 12 years, that property that's 1.65 here is going to be worth 3.2, 3.4 million, where a little apartment building in Cincinnati is never going to be worth $3 or $4 million.
Hell no.
Never.
If it is, it's worth more than the whole damn city.
Yeah. Right.
But bro, think about this. Imagine having 10 of those in San Diego.
Yes.
That's the point I'm making. So all these people out here, if y'all listening to me, okay? Look, if you want $10,000 to get out of your rat race because, it costs you 10 grand to live, you want $10,000, get your 10,000 in Cincinnati, get your 10,000 in the Midwest, but then take the rest of the money, right? And start parking into compound appreciation in the market because you're going to go way farther. That's why I'm telling you, think about this. Come from Vietnam with nothing, bro, and be a billionaire here in the next 15 years. Are you kidding me?
It's inspiring, man. But I agree with you. I think if you have a little bit to invest, and this is your first deal or your first couple deals and you want to go in the Midwest because you want a little cash flow so you can get a little freedom, do it. I think it was good for me. I got my feet wet. Cincinnati, it's never going to boom, but it's also never going to bust. So you're never going to lose your ass. It's pretty hard if you could buy an 11 unit apartment building for $350,000, it's pretty hard to lose money. right? But I think what it did for me is I got the confidence, I got the experience, and I made all these mistakes with that deal. That deal had hookers, it had prostitution. I hired the wrong property manager. I had to fire the property manager 2 months in. And I learned what it was like to renovate units out of state. And so I got all the experience and I got all the confidence to go and do a second deal, and then a third deal and a fourth deal. And once I had enough cash flow to walk away from the day job and go full-time into real estate investing, then I was able to kind of pick and choose my spots and take a little bit more risk, go into higher cash flow markets, even though, hey, maybe I'm not going to get any cash flow for the first 3 or 4 years. I might break even, or even come out of pocket a couple $100 a month, which I'm totally cool with, because I know over time with inflation and the way rents go up over time and appreciation, I'm going to do well.
That's right. And we can always 1031 this property, since it has so much equity after a compound, into take all the equity and then put it in something different again. Now it's going to cash flow when you got all the equity going into another property that's bigger. Now it's going to even work better. Like I got a bunch of 8-unit, 10-unit apartment buildings, right? I got so much equity in some of these that I'm looking for a 100-unit apartment building right now, like a value add 100 building. I take some of those equity, I put it 50% down, because if there's equity, if I have all the equity, I put 50% down on a big building, it's going to cash for way more than my 10-unit building. So I use it for leverage. I use it for write-off. I use it for let the compound grow and 1031 into bigger property. But yeah, man. But here's the thing, bro. If y'all never get started, this shit don't want to make no difference anyway. You got to get started with something. That's why I always tell people, just go buy one. Buy one, and everything will start from there.
Yeah, I totally agree with that. I think a lot of people get stuck with, I need to read one more book, or I need to listen to one more podcast. Seminar. I need to go to one more conference. Right? And like a year goes by, I'm like, hey, what's up, dude? Where you at? And they're like, oh, like I'm still like working on this. And, you know, I got a little sidetracked, life got busy. It's like, dude, you know, if you really want it bad enough, like it doesn't matter what part of the market cycle we're in. You can make money in any part of the market cycle. Like when I jumped in, everyone told me it was too risky. They were like, because I cashed out my 401k to get into it. And they're like, they outlined all the risks. Like, oh, don't invest out of state. Don't cash out your 401k. This is a bad time to get in. And then next thing, COVID happened in 2020. Like, oh, don't you regret getting in?
Right.
You know, and also, so there's always going to be an excuse not to get in. But I realized like I wouldn't be where I'm at today if I would have listened to all that noise.
Yeah. Well, here's the thing too, bro. You know this. You got to really be careful who you're listening to.
Yeah.
Right? I mean, like if a guy or a gal only owe 3 or 4 property, you can listen to them and learn what they learned on a 3 or 4 property. But if you're trying to scale, you can't listen to someone who don't do it, who haven't done it. That's why a lot of people can't knock me unless they just really want to find anything to knock. I just take care of my business. I'm on my own track. I do my own thing, right? I put out my own content from life experience. You can't better no knock me because why? Because everything I preach, I do. Everything I teach students, I do. And I'm still doing it in real time today, right? And so unless someone's doing it, don't listen to them because it's going to confuse you more.